You decreased expectations for same-store sales here in the U.S. to 1% for the third quarter. You are going to close more stores, open, obviously, continue to open others, but look for unpenetrated markets. I guess my first question, in listening to you yesterday, seeing your decision to increase the dividend and the buyback, and reading the analyst reports this morning, is Starbucks a mature company?
Well, David, first of all, welcome to Starbucks.
It's
great to have you here this morning. You know, what we talked about yesterday was really something that we have been working on over this last year, which is fundamentally streamlining the company over this last year so that we can focus on the most important priorities. And those priorities are going to allow us to really transition into a phase that I call growth at scale. You know, you look at Starbucks was founded in 1971. And so over the last 47 years, you know, we have built an iconic global brand. 77 countries, 28,000 stores around the world, serving nearly 100 million customers a week. And so now at our scale, I think we've got to be much more disciplined in setting our priorities. We've got to be more data-driven in terms of how we're allocating resources and tuning the model. And we've got to be much more agile as innovators. And so what we did yesterday was set the stage for that transition to a company that's really focused on growth at scale and a set of initiatives that are going to help us get there.
Does growth at scale mean not the growth that Starbucks and Starbucks investors had come to expect previously?
Well, look, our growth has slowed in the last 2 or 3 years. But
there's more Starbucks than there are McDonald's in this country.
Well, you look, there's 28,000.
How could it not slow?
Well, 28,000 stores around the world. And certainly, you know, in the U.S., we're going to continue to build 400 new company-operated stores a year. What we talked about yesterday was the fact that typically we close about 50 stores a year in the U.S. as just part of our normal pruning of stores. And this year we're going to prune 150. But we're still going to build 400 new stores in the U.S. But if you look on a global basis, the 3 priorities that we set, number 1 was growing our retail business in the U.S. and China. Now, the U.S. and China are in 2 very different stages. China is in a build stage. You know, we just increased the number of new stores we're building in China to 600 new stores a year.
With 3,300 stores now, I've heard you say you build one every 15 hours, a new Starbucks opens there. Although to the point on China and what is giving some people pause this morning, same-store sales comps went from, I think, 8% to 0 in China. Now, it's only 10% of your income, I believe, at this point. But to your point, it's a growth industry, growth area for you. Should that be a concern?
You know, we focus on growing the number of transactions in China. And with all the new stores we're building, plus the existing stores, you know, this quarter we'll grow customer transactions something like 15%. Now, that said, you know, we've continued to grow same-store sales in China. This particular quarter, with the acceleration of new store builds in the cities that we're building in, there's some cannibalization of existing stores.
You talked about cannibalization. You also talked about these third-party deliveries, that there was some dislocation there.
Yeah, and what's happened is there's been some new entrants in the market, competitors that are focused on delivery, and they're subsidizing the delivery. Now, we have a very, very strong mobile ecosystem in China, but we have not yet lit up mobile order and pay and delivery. We have mobile payment in China. And so the team in China is working diligently with one of the largest tech companies in the world to now put together the process where we can light up mobile order and delivery in China. You know, the key thing in China is we're playing the long game. We've been there for 20 years, and we continue to post great growth in China. We just acquired the East China joint venture, unified mainland China. We're going to light up mobile order and delivery in China. And the fact is, in the next 3 years, we're going to build stores and enter 100 new cities in China, each of those cities the size of Los Angeles or greater.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.